Hello and welcome to this short presentation on an introduction to the Annual Investment Allowance. My name is Lois Sterling and I'm a Director at Giavetta Consulting, a capital allowances consultancy practice working throughout the UK, based in Scotland. During this short presentation, I'm going to give a general overview of what capital allowances are and talk more specifically about a type of capital allowances, the Annual Investment Allowance, how that operates, what qualifies and why it matters to you. So what are capital allowances? Well, capital allowances are basically Her Majesty's Revenue and Customs allowable equivalent of depreciation as you would use in your accounts. Capital allowances allow business to claim tax relief for items they have purchased for use in their business. There are many types of capital allowance and they cover expenditure on research and development, patents, know-how and mineral extraction. However, this presentation will relate mainly to expenditure on commercial property, be that buying, developing, extending, fitting out or refurbishing. It's worth pointing out that many of those spending money on commercial property, be that investors or owner-occupiers, are not claiming what is actually due to them in terms of tax relief. It's estimated that only around 45% of property clients that could claim actually do so, and this is for numerous reasons. Also, it's also estimated that around 60 to 70% of commercial properties may not actually have had a capital allowances claim ever prepared on them. So where are the opportunities to reduce your tax bill? Well, talking about property and the property life cycle, there are numerous opportunities, be that at the acquisition, the development or redevelopment, fitting out, refurbishment, the sale of the property, and even the demolition of the property can all provide tax relief in some format. And depending on where you are in the stage of the property cycle, there may be additional qualifying expenditure to be had. Now, typically this boils down to stamp duty land tax, land and buildings transaction tax as it is here in Scotland, professional fees, preliminary items, and even VAT can be added to the main cost items. So in terms of the typical levels of qualifying expenditure you can expect, well, that depends on the type of property. This slide shows a range of commercial properties and typical low and high values of expenditure qualifying from a purchase on plant and machinery. Now, as you can see, this varies widely between the different types of property. But basically, it boils down to the level of specification of your property. The higher the specification, the higher will be the qualifying expenditure that you will achieve. I can just touch briefly on refurbishments, as can be seen here. They can be quite lucrative in terms of expenditure qualifying for plant and machinery allowances. And in some cases, up to 100% may qualify depending on the work being carried out. And this all boils down to what can be termed as builder's work in connection. And this terminology allows us to claim expenditure for installing that plant and machinery within an existing building, typically holes drilled for pipes or electrics, and sometimes even lift cores may qualify. We've talked about the different types of allowances and tax deductions, and this slide shows that there are various rates of deduction. They range from 150% for land remediation relief down to a measly 3% deduction for the structures and buildings allowances. I don't intend to say more about these specific allowances and what qualifies, as we do separate presentations on these allowances, and these are available on our YouTube channel or on our website. But just to point out that you can see capital allowances are a great planning tool, and thinking about your capital expenditure and what you're actually buying can help you maximise the tax relief available to you. And the Annual Investment Allowances is one of these great tax planning tools, as you get 100% tax reduction. So what is the Annual Investment Allowance? So let's delve in a little bit deeper here. So this was introduced back in 2008, so it's been around a while now, but it provides 100% tax relief for items qualifying for the Annual Investment Allowance in the year that these were purchased. As with all other capital allowances, you need to claim this on your tax return, and it will be a portion where your chargeable period is less than 12 months. The Annual Investment Allowance rate is set by the Exchequer each year in the budget. And over the years, this has been played with to encourage investment, and it's ranged from £25,000 up to the current value now of 1 million. However, that current limit is set to be reduced on the 31st of December. So please, if you haven't thought about this, you need to be thinking about it now. But to reiterate what this is actually worth to you, for a basic rate taxpayer or a corporate rate taxpayer, for every £1,000 that you spend on qualifying expenditure, you will get £190 of tax relief. And this is even better for higher rate taxpayers. As you can see, for every £1,000, a 40% tax rate payer will be receiving £400 of tax relief. The Annual Investment Allowance applies to companies as well as individuals, sole providers and partnerships. It's an all or nothing allowance. You can claim it in part, but if you claim part of it, the remaining allowance won't be carried forward, so it's lost. It's available on most items of plant and machinery, including business equipment. But as we're chatting about property, it also relates to fixtures within that property. That's your boilers, the heating, air conditioning, electrics, kitchens and sanitary ware. Things it's not available on are cars. However, there is a first year allowance available here depending on your CO2 emissions. And it also doesn't apply to any expenditure that would qualify for the new structures and buildings allowance. And you only get one annual investment allowance per tax year. However, you're allowed to allocate that as you see fit. So this allows you to secure the best benefit, maximise your tax saving. So you're looking at applying that to the first to 6% plant and machinery, and then to 18% plant and machinery. We've said that each company has its own annual investment allowance, but caution, only one annual investment allowance is given to a group of companies or related companies under common control. Also, where the activity is permanently discontinued in a year or chargeable period, you cannot make an annual investment allowance. And Revenue Customs have also put in place anti-avoidance provisions. This stops you claiming an annual investment allowance where the transactions between parties were set up simply to take the benefit of this annual investment allowance. So what is the value to you? We're demonstrating here the value by using two examples. On the left, using the annual investment allowance in the company's pools, and on the right, without using the annual investment allowance. We're going back to the 2018 rate, so it gives a better definition. Company here, XYZ Company, have incurred £300,000 of qualifying expenditure in their tax year ending the 31st of December. And of this £300,000, £220,000 qualifies for tax relief at the 6% rate, 80% at the 18% rate. And as you can see, there is nearly £30,000 difference in the tax relief that can be achieved in that year when you utilise the annual investment allowance. So hopefully it's pretty clear from these examples that it is important to consider the annual investment allowance and making sure that you are claiming this relief. So why does this matter to you? As we've said, the annual investment allowance is not an all or nothing allowance, so planning is important to ensure that it's not wasted. And this is especially important around rate changes. Where this rate change straddles your tax year and the rate is reducing, this can cause some problems. If we look at example 1, we're looking at a company with a March year end, and the annual allowance is dropping to £200,000. Where it straddles a tax year, you've got to apportion the rates. So from the 1st of April to 31st of December, the annual investment allowance is only £750,000. That's 9/12 of the £1 million rate. From January to March, it's 3/12 of the 200k range. The annual investment allowance here is 50,000. So there's only a total allowance available of £800,000 to this company. However, the rules say that the maximum allowance for the final 3 months is this £50,000. This means that if you spend more than that £50,000 in those last 3 years, any remaining expenditure will qualify at the lesser 18% and 6% writing down rates. So thank you for joining me on this short presentation. I hope you have found it of benefit. But if you have any further questions, please contact Alan or myself. We're always happy to answer any questions and help out where we can. Thank you.